All right, what is going on, Discord family, and welcome back to another edition of Market Review with me, T. Hobbs. Today is 25 March 25, year of our Lord 2025. It is a Tuesday, and listen, this market has been so predictable all year, but today was just so easy to trade, in my opinion. If you struggle today, no problem. I get it. Some people don't do well on range days. I don't do well on whatchamacallit days, right? On trending days. So I get it. Right. I understand it's a struggle. Every day is a struggle. Some days will be easy, some days will be hard. Today, in my opinion, was pretty simple price action, right? It was just really choppy, really slow, high resistance in both directions. So as you guys know, as per usual, we're going to be breaking down the S&P 500, the Dow Jones, the NASDAQ, and looking at the volatility index to close the day. We have two plans on the day. I wrote two. Yoga put out a pre-market plan for the members. Members pre-market plan is basically the same as my S&P plan. So I'll just go over what I wrote, and then we'll move on from there. So we'll start over here with the S&P 500, and then hang on. I did want to start showing some of the trades that I took. So let me pull this up so we have that ready to go. I'll put that right there. Ooh. And then put this. Where's the other joint? Oh yeah, it's right here. There we go. Okay, cool. All right. Got those all lined up for the StreamYard or whatever. So, okay, so the breakdown. Let's jump right into the S&P 500 and we'll break it down here, okay? So, pulling up the pre-market plan. And again, I like to grade myself on how well I followed my plan. That's why I write a plan, right? I try to make sure that I stay in line with that, right? If it's out of line, it's okay. I can adjust it accordingly throughout the day, all right? So the big thing for me was we were in the markup phase. We were bullish as long as we stayed above 57.87, which we did. That was this fair value gap right here. We stayed above it. So we remained bullish. We were bearish as long as we stayed below 59.2175, right? So I was good to look for shorts as long as we stayed below. The closer we got to 59, right? You could see 59 was way up here. So I had a lot of room to kind of look to long or short the market. My thesis was going in on the day, we were still pushing to the upside with strength after consolidating at the highs during every session. Look for New York session to bring expansion. ADR was 1.81%. I think this was my plan from yesterday, to be honest. No, this is today's plan. No, this is today's plan. So we consolidated over every session at the high. So I was looking for expansion inside of New York. My range on the day, 58.25 through 58.1275 at the high. That's what the white box is. And then 58.0125 through 57.9450 at the lows. That's what this other white box is. My plan, in any event we got above the NWAG, I was looking for a bullish break and retest above the NWAG at 58.2350 through 58.05 and look to target the NWAG up here at 59.16. If we came up here, then I was looking to short rallies, weak rallies up to this level, right? Targeting this previous NWAG. Now, these trades weren't activated today. Does that make them invalid? Absolutely not. Because the market never traded away from them. It just took the market literally all day to get on top of this NWAG, right? So that just means that these are probably going to be good trades going into tomorrow, right? So this will probably be the same plan that I have for tomorrow. But let's go right into exactly how I viewed price, some things that I did to adjust on the fly, right? And yeah, they kind of fit already what I was already doing, right? So we'll go to the 15-minute chart first and foremost. Right. And I like to just give you guys a blank stare of what I see, right? Like my brain, for whatever reason, needs to have price in some type of structure format. Maybe it's my attitude, maybe it's who I am as a person, right? I like to have things in structured format, right? So when I'm looking at price, I need more than just an empty screen, right? I need more than just price action going up and down. I need bases. I need a ceiling. I need a floor. right? I need slats in the middle. Like I'm a carpenter, right? So that's what makes sense to me. So that's why, you know, I always make sure that I know where the ceiling and the floor is, right? First and foremost, we always ask ourselves, what did London do? The previous session is important. You want to know what that range is, okay? The previous session was London and Tokyo. Tokyo brought the high at 58.16. London brought the low at 58.02. And right in the middle of that, we got midnight price, which is 58.0725. Okay, that's important, right? So if London's bringing the high, right? And I mean, Tokyo's brought the high and London brought the low of the new range, 50% of that probably slaps right here around 58.10, right? So that information is important. And then what does New York do? We trade above London, right? Expanding, and then we consolidate, right? Which means consolidation means you really can't be wrong unless you're trading in the middle. So once you identify the consolidation, it's important to identify what the highs and lows are. And that's what I did when I brought back this chart. So we drop down to the 5 minute. You can see my pre-market plan was the white boxes, right? My plan was to trade. I was looking to short the highs of this white box, long the lows of this white box. But the way price was developed, I looked and I said, okay, the way we're coming into this macro, I'm watching 8:59.10, right? So anytime I start to trade, I started around 8 o'clock for New York session, Eastern Standard Time, right? And I start paying attention to what the 8:59.10 time frame is doing, right? So you see 750 does nothing, consolidates and breaks up to the high. After we get up here inside of 8:30, what do? We break the low. Right there, boom, is when the market turned bearish for me, right? Now, all I'm waiting on, right, is where the market's gonna stop. So two things you could do, right? One, you could see where the previous low and the previous high is. You could just draw a box, right? You could just say, okay, I want to see what price is going to do when it comes back into this level, right? AKA not see what price is going to do. I'm shorting this shit when it comes up here, period. There is no let me see what price is going to do. When it gets up here, I'm going short, right? If it gets up here inside the macro, even better, right? But when it comes up here inside of this yellow box, I'm getting short. I'm putting my stop above this high and I'm living with that trade. Why? Because I believe that the market just broke structure, right? We're inside of a premium and we have everything beneath us, right? London is beneath us. Tokyo is beneath us. So up here, I'm very bearish. If I'm wrong, that's okay, right? I took the trade that I thought I saw, okay? So the market comes up here, right up at 58.33 or whatever, 58.3275. I got short 58.31, right? My targets were New York AM, right? Previous day high, right? New York AM, and then settlement price, right? And then midnight, right? And you can see that's this trade, right? Let me see. Oh, that's this trade right here. So I got short 58.3125, right? I put my stops above this high, right? So I was risking 2 or 3 points, right? My target was true day for 23 points. We ended up going as low as 18 points, give or take. And then I trailed the position once we swept settlement twice. We tapped it here, right? And then we swept it. So I said, nah, let me trail to make sure I don't give back too many points, right? I ended up floating about 200 bucks, right? 4 points on the day. And then I took the 14, right? So I got stopped out for 14 points and that was that trade, okay? So let's move back over how that trade was developed. If you shorted it here, well, Hobbs, that's not the macro. Like, bro, when price comes up here, fuck the macro, okay? Let me make that be clear. I love trading in the macro, but if price gets up here before the macro hits, structure and live price action trump macro time in my book, right? Like, yeah, I have a sequence, but when it's up here, oh yeah, I'm getting short here. And guess what? If it trades up again inside the macro, I can just add more position, right? Because I'm still validating this trade idea, right? I didn't add because this was my first trade on the day. I like to just go in light on that first trade, right? So I kept the position on. Like I said, I was only in like 1 or 2 points of drawdown max. And then immediately price started to slam in my favor, right? Had I waited till 9:30, I would have gotten a later entry, right? And I would have had to risk more, right? At the best, I probably could have got 58.29 and I would have been risking 4 points versus risking 2 points over here, or 1 point basically. Price traded down, like I said, and then we got this push down here back in the settlement, 58.13. We pushed up, I held, right? Then we pushed down and swept again. I still held, and then I started to trail my stop down and got stopped out by the reversal pattern that was placed. This beautiful long, I didn't take this long because I was already getting out of the short. I took the time to go eat food because I knew if I didn't take this long here, I'm not touching this shit on the way up here. It's not that you can't, it's just I'm a reversal trader. The reversal happens down here. The continuation happens here, right? Like the breakout happens here, right? The scalps is all through this. So if you're all those traders, then you can take all those trades. But if you identify as a certain type of trader, there's certain levels you got no business being in the market. I identify as a reversal trader. So if I don't get this move down here inside of what I deem the buy box is, I ain't got no business trading up here because it's just not how I enter trades, right? And I try to stick to that because it just keeps me out of a lot of trouble. So anyway, the market trades down into 950. We get exactly what we want. Nice, beautiful long here. The market trades down into 1025. Again, continuation trade, not for me, but it's still a good entry. The market rallies back up, and guess what it does? Now we're starting to sequence to the bearish side. So in order to do that, we have to announce the new trend. The market comes down, breaks the lows, right? Multiple lows get broken. Therefore, it needs to go back up, right? If we're going to remain bearish, to go back up and do what? Take out the high. Once it takes out this high, the market is now bearish, right? It's in bearish character. So anything above this high is a short. If we get above this high at 58.34 inside of a macro at 1050, again, close your eyes and sell the market, right? We trade up into 1050, creating a bearish, oh my God, this is so bearish. Doji candle at the top of trend, retest of that doji candle, break through the lows of 58.32, go back up and retest inside the macro, this same level. Again, just draw a box, draw a box and say, okay, I didn't get the initial push down, right? But every time the market taps into this previous low, right, and this previous high, I'm going to short it. There's your short, right? Market drops down, breaks the low, comes back up here, fails, 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 fails. You get the point, right? 10 failures inside of this area, over 10 minutes of buying, and the market's not going anywhere. It's time to get short, okay? You don't believe that? Fine, okay, cool. Let the market drop, expand the box. Now, every time it taps into this box, I'm gonna short it, right? Because you're still in the area where the short is valid, right? You're still in the sell area. This is still a reversal, right? It's starting to become an area where you should probably leave it alone, but you're still in reversal territory. We trade up into 1025 or 1125, another area that, or time zone that I've back tested, and this shit works guaranteed. 1125, we trade up, we trade down on the other side of 1145. We trade back up into weekly settlement, a fair value area where the market could reject from, and we push straight down into 1150. Now we consolidate, down some more, consolidate, down some more. Where? Into what we talked about during this trading session is the low of the day. That always creates a range scenario. If we can't break the low and we're not breaking the high, it's a range scenario. Therefore, we just mark a little buy box, right? Inside of our already done setup, right? Our chessboard is already set up, but now we got an intraday trade, right? This is my second trade on the day, right? I took 2 trades on the day. This was my second trade on the day, right? And I'll share you guys that trade as well, right? So what did I see? I saw us trading down into 1225, right? And the market refusing to trade lower. This is my area. So the only thing I wanted to see, right? I went down to the 30-second chart, and I'll take you guys down there too, right? So I went down to the 30-second over here. I think it's, yeah, over here. So I told myself we're trading down into 1225. We're at the low of my chessboard, all right? Now, all I need to see is the market defend this area, right? As soon as we swept this and we defend it here, I got long at 58.16, I think 58.16.25 or something like that, right? Somewhere inside of this little range right here. Yeah, I got long on the sweep of these lows, right? 58.16.25. Now, on the 30 second, you're like, Hobbs, you're late, but this is not a late entry. Trust me when I tell you that, right? So we go over here, and this was my trade. I got long 58.16.75, right? Stops were below this wick here. So my risk was like, again, 2.5 points, give or take. Like it wasn't nothing, right? Like at the end of the day, I was already up significantly. I was up 14 points. I was risking 2.5, all right? I was trying to make 20, but I had targets in mind, right? My targets were, hey, if we run up into previous day high, I want to see how we react, 58.25. That's 10 points. Bet. We hit previous day high. We pushed up aggressively, right? And I ended up getting out of the trade. Here, I'll show you guys my actual executions. What the heck is going on? Oh, my phone is ringing. All right. So the trade finished up, right? I ended up closing it. Why? Because we were failing, right? We were failing at previous day high, right? I mean, we were failing at weekly set, right? So what I ended up doing, what did I put in here? Okay, I grabbed the wrong. Let me put this in. Okay. Yeah, here we go. So I ended up closing at weekly settlement. Why? Because weekly settlement was another fair value level, right? And when I go back to the chart, you're going to see what happened at weekly settlement after we rejected weekly, after we hit it. So I closed it. I thought this was a good place to close it. I locked in 24.5 points on the day and I was done trading. Okay. We go back over here to the actual chart, right? And you can see as soon as we came up to weekly settlement, we immediately rejected. This was a very important level for me. So I said, I'm not going to hold past this level. Like I want this thing to go up here, but if it's not going to pump, I'm just going to take it all off here at settlement. Glad I did, because right up, we traded up into 110, which was another red flag to get out, right? And we straight flushed straight back down to my entry. And I would have been, this would have tilted me, guaranteed, right? So the market came right back down. Then it started to consolidate more. Now, it was at this moment that I thought for sure this was the high of the PM session. But what do I always say? You could never count these bulls out. They have never seen a price they don't want to buy it, right? So all we did was literally sit down here for 2 hours, right? But there were some key nuggets inside of this structure that should have led you to believe that the market could potentially rally up out of here. First, we broke the low, okay, and could not trade lower. That's number one. This green box here represents the low of the day at the time. We broke the low, and the second we broke the low, we ended up running the high, right? That is extremely bullish. That is a change in order flow, right? And a potential inverse head and shoulders about to start. We break the high, we come back down here, and we create a small inverse head and shoulders. We break that low again and immediately reclaim the high. That right there, extremely bullish. It's almost over, right? That's ball game. Then we get to the macro, and this is where it gets good. Because in the macro, as long as this low at 58.09 is intact, we're going up, right? Because there's nothing left to do now except for go up or go down. This is the last macro of the day. The macro starts by tricking a couple people out. Trade up to come down. Yes, it did. Trade up to come down. Yes, it did. But what did it do once it got to the lows? Every time it went down, it failed to take out the lows. I always tell people, if you want to get long, watch for what the market does at the lows. If you want to get short, watch to see what the market does at the high. If we're not taking out lows after we've established a validated low, right? i.e. a low that broke a high, right? Broke another high, right? And failing to go or failing to get broken, that's a validated low. The market goes back into this consolidation one more time. And at 336, right at the close, because that's what they do, these fucking bulls, right? They sent this thing to the moon, right? I'm still not convinced that we want to trade higher, but I mean, geez, this was very convincing, right? So we traded down like a falling wedge, and then we just exploded right back to the upside. So ultimately, the market basically ranged, which is exactly what we talked about. Inside the Discord was a potential, but you still need to understand we're still in an uptrend because we did break yesterday's high, right? although we kept breaking it, reclaiming it, breaking it, reclaiming it, we ended up closing above yesterday's high, was an indication that we want to trade higher. Not to mention 1 o'clock price brought the low, 3 o'clock price brought the high, right? You can see we're opening up looking like we're trying to go higher. So, all right, let's move on to the Dow Jones. I'll go over my pre-market plan for the Dow. Again, I know you guys are probably ready to trade. Some of y'all like to trade at Tokyo, so I'll try to hurry up and get you guys out of here. So, all right, pre-market plan was about the same. The macro time was essentially the same. I mean, the macro was essentially the same, so I'm not going to go over that. Our range, 42,968 through 42,883 at the high, 42,808 through 42,711 at the lows, right? We were looking for weak rallies up here to get tested. We never came up there. Instead, the Dow Jones ended up staying right in range all day long, and I would have loved to be over here, right? I didn't trade it, but I mean, I ate good on the S&P. The reason why I said the Dow was very, very clean is because it stayed within the original chessboard, and it followed what I would like to say is like normal market structure, i.e. these red lines down here, this red line down here was the true day, right? All day long, I was trying to get the S&P 500 to break through true day. The Dow Jones did it right away, right at 9:30, right? So it's hit or miss, right? You never know which one's going to do it, or which one's going to obey structure, what I deem the right way is. But the Dow Jones, in my experience, does it more often, right? The S&P sometimes, and this is 2 days in a row, the NASDAQ or the S&P didn't go and sweep midnight, but the Dow did it both days. So take that how you will. Anyway, what are we looking for? We're looking for the market to trade up into 9:30. Why? Because I'm looking to get short. We're above midnight. We're above London. We're at premium for the day, right? I'm looking for the market to return back to those levels so they can let new buyers into the market. So if I want that to happen, what do I need to happen? I just need us to trade up into 9:30. 9:30 comes up. We trade straight up into 9:30. We get the break. Then we come back up here to retest it. Again, same thesis. Take your little box and draw it right around the wicks, right? Boom. And you see, we tap right into the box. You could go short, target midnight. Like I said, the Dow did its job. It went straight to midnight, right? And then boom, you could get right back inside of 950, right? Get the higher low and go back up and target this box up here, right? Boom. This is all the market did all day. Inside of 1050, we were inside of the box, nice little double top, straight back down to where? Midnight, right? Now we're inside of this box, right? The Dow Jones was clean. I'm not even gonna cap. Like the Dow Jones was damn near perfect, to be honest, for a range day. Like this was perfect, easy money to trade, right? 1 o'clock, 12:30 pushes us back up to 1 o'clock. 1 o'clock comes down and breaks the low. So in order for us to remain bullish, we got to go back up and break the high. We tap back into or PM session from yesterday, which is the low of this chessboard, the white area here. We trade down into that and then boom, go right back up to the highs. And now we're gapping up to start the Tokyo session, which is expected, okay? Moving on to the NASDAQ. Again, NASDAQ was getting busy today as well, right? We had daily supply right above us, which is the reason why I would say it took us a little bit to push through this. But once we pushed through it, we ended up using the top of the chessboard. Both the ES and the NASDAQ basically used the top of the chessboard as support once it got above it. So we got above it, pushed back down to the top, double bottom off the top, triple bottom off the top, basically previous day high break and retest, if you want to simplify it, is what the NASDAQ did. And it was clean as hell as well, pushing above that daily supply zone. And again, probably looking to trade higher as we approach Tokyo and London sessions. All right, looking at the volatility index, again, I keep talking about this thing because it's gonna play a part at some point, right? In my opinion, I'm looking at this as just like an end of the month rally, right? If this monthly candle doesn't take out the previous monthly's candle high, I'm looking at this as very bearish, and it'll probably take another 6 days or so for this all to play out because that's when the month ends, right? And if that's the case, I want to see the VIX pushing back down to the 16s, the 15.5s going into April, right? The first week in April is next week. We got non-farm payrolls. We got tariffs actually taking place on the 2nd, right? There's a ton of reasons for this market to be hurrying up to get this VIX back down to demand, because once the VIX gets to demand, wherever we are, on the market, I'd be paying close attention to those weekly levels to see if we put in that weekly low, and NFP could potentially push us down very aggressively. More of that to come for the top down analysis this weekend. That being said, ladies and gentlemen, this is the market review. My name is T Hobbs. This is the Trader Shop. We'll catch you guys in the next one, man. Peace.